Today is 3rd April, okay? What we have done, a very quick revision. What we have done something with respect to the substantive procedures. We have done with respect to assertions, is it? We have done something with respect to the things, is it right, in terms of assertions and what are the substantial. This is the way we have started, is it right? This is the way we have started. What we are going to do, we will work on substantive procedures, estimates, okay? Little bit apart from that. See, I have divided this lecture under different segments, okay? 7A, 7A and 7B. Fine. Now, how it is going to be worked it out, okay? When we are talking about the things, we will estimate, is that we will estimate what is the element of error, okay? What is the element of error? We will have something in our mind, yes. See, depending on the organization also, is that if the organization is big, is that if your organization is big, millions of transactions, is it right? Then we'll say that it is 1%. Is that 1% is also a very higher amount, okay? 1% is also a very higher amount, is it right? Higher percentage, okay? Higher proportion. But we will have what we are doing, we will have our own judgment, okay? Estimates is nothing but we will have our own judgment. Accounting judgment will be there. How much error we can manage. See, we cannot work with one precondition that everything will be 100% correct. Okay, you cannot have this approach. We cannot have this approach that yes, we are going, there should be a perfection. Perfection will not be there. Some errors. If you go by perfection, nothing will work. We should have some flexibility. Okay. Now we go back into what are the accounting estimates. If you have something in our mind which we have discussed, we have done with respect to overall materiality, is it? Overall materiality, and we have done with respect to performance materiality. Is it? Performance materiality. In our performance materiality, we'll say that it is sales is going to be 1%. Margin of error. Okay. We are talking about profit after taxes. It is from maximum 5%. We are talking about the assets. It comes to 2%. Like that, we will have something. This is the standard that has been stated by the ACCA. Okay. Now, what we are doing, we are making just an assumption, is that you will have that 4 things are there. Okay. We have an accounting estimate. We are talking in terms of a estimation of uncertainty. We are talking about management point estimate, and we are talking about auditor's point estimate. Here, if you take into consideration, to some extent, I will tell these are the things based on my experience of previous examination, question papers and everything. One of the important is accounting estimate is really important. Accounting estimates and the auditor's point estimate. Is it? We are talking about accounting estimates in terms of financial statements. Management estimates, management will also estimate that what will be the percentage of error. Auditors will also have point of. Everyone will have their own estimation. What is the accounting is the approximate of the monetary amount in the absence of precise means of measurement. Is it? Approximation of monetary amount. Yes, what we are doing. We will say in most of the cases, in most of the things, what we will do, you will do rounding off. Okay, you will do rounding off. When you are doing rounding off, definitely there will be some plus or minus. Every day there will be some plus or minus shortage will be there in accounting. Okay, you will say plus or minus. You take into consideration $10. Okay, you will take plus or minus $10. Likewise, you will have some, means you can manage it. Is that in the banks, if you see the teller will get some incentive because of the maybe misplacing of the currency during the only during that position he will get some additional amount, maybe some plus or minus will happen with respect to that. Here also it is an approximation of monetary amount in the absence of any precise means of measurement. We'll say that yes, it is going to be plus or minus $10, plus or minus 10 reals. Okay, fine. That is an accounting. That much can be manageable. Manageable. There is no precondition that okay you can. Is that there is no scope? Is that there is no precondition that you are going to make the things clear. There is nothing standard is not there. Is that first one? Estimation uncertainty is a successfulity of an accounting estimate and related disclosure due to the inherent lack of precision. Is it estimate? See, we have in some cases what will happen? You are going for an audit. Okay, you are going for an audit and you are doing audit for inventory. Is it? You are doing audit for inventory. Definitely, you cannot say that everything will be disclosed completely. Okay, everything will be. You will have all the disclosures will be there. Is that what we have said? We have said very clearly it should be appropriate, sufficient and appropriate. Keep that in mind when the moment you say it is sufficient. Is it sufficient? Now I will tell you, if you are getting information, if you are getting 50% of information, 50% of evidence, but 50% of the evidence is the quality evidence. When we say it's a quality evidence, we are getting the evidence from the external parties. We are getting the confirmation in writing, written confirmation by external parties. Fine, we don't need one evidence from the internal, two evidence from the external. Then it makes that yes, it is good for us to make a evidence. It is good. But if you are getting all the evidence internally and we are not getting any external evidence, then the quality of that evidence is weak. Okay, now you are understanding how you have to differentiate between evidence, the sufficient. Now you cannot make sure that every other thing will be disclosed by the client. Something will be disclosed, something will not be disclosed. Whatever is disclosed, based on that we are making an estimation. Is it? We are making an estimation. Is it? Next, third one. Management will also make an estimation. Is that the amount selected by the management? Okay, for recognizing or disclosure of financial statements. What is the point estimate? They will say that yes. Now you be very clear. Is that accounting estimate? I'm just taking accounting estimate will be 10%. Management estimate will be 5%. Then automatically auditor will also do the estimate. Okay, auditor will also do the estimate based on the risk they have been assessed. Okay, risk has been assessed. Auditor will say that the point estimation is their estimation is 4%. Okay, likewise, similar, we are not talking about the values. Okay, we are only here to understand the concepts. Don't write percentages, all those things in examination. Okay, you just have to write the concept. That's all. That's more than beyond which is that management will also do a point estimate. Yes, what is the plus or minus that can be errors can exist in the financial systems. That is the reason what you will do. You will never say correct. Always you will say it is true and it is fair. We will never say it is true. We will not give absolute. We will not give an absolute opinion. Okay, we will never say absolute. We always say reasonable. See the thing. The moment you are using the words, automatically the message is clear. Is it? You will have this from the management point estimate. And auditors or auditor range is the amount or the range of amount respectively from the what we are talking about, the audit evidence in evaluating the management. Based on the management we say 5% plus or minus. Then auditors will have their own estimate based on the management. This is very important. I am asking you again, Okay, I'm asking you again. IS 540. IS 540 directly says that accounting, auditing, accounting estimates, including the fair value accounting estimates and related disclosures. Is there related disclosures? Is that I will be very specific once we are coming after Eid, okay? Very specific. I will ask these things, okay? I will write it on my paper. I will keep it on my under my stylus, and I will ask you immediately what are these things. You also have to keep on A4 size paper. These are the things. We only need this. I am telling you, IS 540 auditing accounting estimates. It includes fair value accounting estimates and related disclosure. If I ask you, if I suggest you that something should be memorized, these things has to be memorized. It makes complete difference in your marks. If you mention this in the examination, almost 10 marks will have difference on your assessment evaluation. Now you can understand how important it is. We are stating our answer with ISA standards. It makes a lot of difference. Okay, these are the accounting estimate, estimation of uncertainty, management point estimates, auditors point estimate. 4 are there. Okay, are you okay? Are you clear with this? Now we have done this. Okay, we have done. If you remember, we have done in financial statement allowances for doubtful accounts. We have the receivables. We have done this. Okay, where we have the receivables in the current assets. Is it right? In the current assets, what we will do? We will say that minus provision. Is it minus provision for doubtful debts? We are doing nothing new. Okay, we are not doing anything new. We are doing the same thing. Is that this we are going to show in the statement of financial position under current assets, whereas what we are doing, we are going to show provision for doubtful debts, where we are going to show in the income statement. This is the accounting estimate. Is that this is the accounting estimate. Accounting estimate, the inventory. Is that with the inventory? Obsolescence, inventory by expiry date. Outdated, okay? Inventory by expiry date. We will make, yes, every month this much inventory will be expired. It will be expired. 5%, 2%, 1%, 0.5%. Fine, something will have. Warranty obligations. See, we are buying a product. When we buy the product, nowadays it is not guarantee, it is warranty. We will be replaced, okay? Subject to terms and conditions, okay? Subject to terms. We also estimate this. What we are estimating? We estimate that, see, everybody will pay for warranty. Is it? Sometimes the product will come with warranty. Sometimes what we'll do, we will take extended warranty. Is it? Extended warranty. See, very safe. Is it? It is psychologically. That's all. You are giving psychological confidence to the customers. As simple as that. But what the firm will do? The firm will say that yes, maybe 5% of there will be some complaints. Maybe 5% will have some complaints. For that you have to make a provision. Is it right? For that you have to make a provision. Now when you are making the provision, what will happen? IAS 37. Is it? IAS 37 talks about provisions. IAS 37 talks about contingent. First you have to write contingent liabilities, and then you have to write contingent assets. See, you got exemptions, okay? You got exemptions. That is one of if the moment you get the exemption, you have to be very specific about some accounting rules also. Okay, standards also you have to be very specific. We have not done FR, okay? Financial reporting we have not done. When you have not done financial reporting, means you have to be very specific about this. We are talking about the provisions. IES 37. Is that it talks about the provision. Depreciation method and asset useful life. It is also an estimation. It is also an assumption. Is that it is accounting? Is that it is an assumption? You are making a depreciation method, straight line method. You will do. You will do return down value method. Okay. Only basically we covered straight line method and return down value method. Straight line method for the buildings, return down value method for property, plant and equipment. Okay. I will write this very clearly. Is that it is there on that link? Okay. When you are talking about with respect to buildings, it is a flat rule. Okay. You will use the straight line method. When you are talking about the plant and machinery, is it right? When you are talking about the plant and machinery, which one we use? We use return down value method. Is that it is a blanket rule? Okay. It applies way. Now asset useful life also sometimes it will change. Is it right? We will have sometimes we will have a revised life. We can shorten up, okay, we can reduce it, minus, or we can extend it. Okay, both things will happen. These are the things which I have estimated. Outcome of long-term contracts. Is that outcome of long-term? See, more than 1 year. Is that more than 1 year? And more than 5 years. It is very difficult to make any assumptions. Is that it is very difficult to make some assumptions. Definitely, sometimes what will happen, things will change. Is that things will change and there will be some revisions will be there. Is that you are going to have revised estimates, okay? Revisions, or you will have a revised estimates. Is that now? These are the estimates. Now, cost arising to litigation settlement. Sometimes what will happen, there will be a legal issues. Okay, legal issues. Very clearly, you will remember these points in chapter 10 and chapter 11. In some cases, in the last chapter, chapter 11, chapter 10, you will come across all these points. Legal issues. It is a small one. When there is a legal issue, there will be uncertainty. Is that so maybe the client will win the case or client will lose the case. Is that the client will win the case or client will lose the case? For that, what we will do, we will create. Is it that we will create a contingent liability? Contingent means may or may not be. Okay, contingent means we are making a provision is may or may not be. Contingent means it may arise or it may not arise. Okay, but you have to prepare for that. That is the legal settlements, litigation settlements and judgment. Provision against the carrying amount of the investment, where there is an uncertainty over its recoverability. You are making the investments, especially you are making the investments in equity shares. In stock market. In stock market. Again, you can say this, it is very volatile. It is when it is very volatile, definitely there will be plus or minus are there. Okay. Now you got the things, all the things we have done. Okay, we have done with provision for doubtful debts, inventory, outdated inventories, warranties, depreciation, long-term contracts, legal suit. This legal suits, as a matter of fact, it will be covered somewhere. You have to take the legal opinion. You have to take the opinion of the lawyer. You have to come with the written representation from the management. Okay, these are the accounting estimates. What it says is the thing. Nature and reliability of information. See, this is a complete sentence. Understand my point? Nature and reliability. This is the way. The nature and reliability of information affects degree of uncertainty. It affects what? It affects the risk of material misstatements. Is that nature and reliability? If the information is reliable, if the information is relevant, nature means whether you are taking, very simple, very, very specific, whether it is internal or whether it is external source of information. Is that whether it is original copy or it is a photocopy. Is it right? It is a photocopy. That is the nature and reliability of the information. Effect degree of uncertainty. Is it right? If it is written in writing, it will be more reliable. If it is from external sources, it is more reliable. Is that it affects the degree of certainty. Degree of uncertainty affects what? It talks about risk of material misstatement. If the uncertainty is more, definitely material misstatements will also be more. Okay, the uncertainty is more, the material misstatements is also going to be on the higher side. Okay, what we are doing with respect to accounting estimate? What are the audit procedures? Okay, see now then we are not going to learn nothing new. Okay, I am telling you we are just working on the things which we have done till the previous chapters. Okay, what we are doing, whenever there is a procedures, you will have an inquiry discussion with the management whether you are working with a one assumptions or alternatives are there. Is that, take an example, we are talking in terms of depreciation. Yeah, we are talking in terms of different. We have very clear that depreciation is straight line method or depreciation is written down value method. In some cases, is it right? In some cases, if you are taking, there are other methods are there. They are based on number of units. Okay, number of units, actual units used. Is that actual units used? You should ask whether there is any alternative assumptions are there. We have any alternatives, or we use the best option or not. Okay, you have to inquire with the management about alternative assumptions. Assessments of whether assumptions, when you are making the assumptions, is it right? Fine, you have the right to make the assumptions. Assumptions will be having a weightage. Marks will be given wherever you are talking about assumptions. But assumptions should also be reasonable. Is that assumption reasonable, justifiable? Now you will say, this is a very general term we are using here. Is that, yeah, general term. But what reasonable means, there should be some logic is to be there. People should believe in that. Yes, these assumptions are valid assumptions. Is that, I evaluate whether accounting estimate is either reasonable or it is misstated. You will also evaluate whether it has been reasonable or it has been misstated. Okay, you have to obtain sufficient appropriate evidence whether disclosures are correct. This is very important. Is that, see the thing, whenever whatever it has been done in the auditing, you should make sure that it has to be disclosed in notes to the accounts. Even it is in a summary format, it has to be disclosed. Okay, it has to be disclosed. Anything plus or minus, it doesn't make any difference. Plus or minus, you have to disclose, you have to report. Is that, you should not hide the information. For what it says, for accounting estimates that give rise to significant risk. Is that, evaluate adequacy of disclosure of their estimation. If the risk is high, okay, there is a significant risk. If the risk is very, very high, see what you have to see whenever you are doing the thing. I will give one small example for you. Whenever a company go for a public issue, is it right? Whenever the company go for a public issue, what they will say, they will prospectus, they will release prospectus. Is that, when they are releasing prospectus, they will also mention one thing very specifically. What are the risk factors? What are the risk factors? Whenever there is a public issue of what? Public issue of a equity share. If you come across any time, it will be useful for you till the completion. Understand point? Till the completion. And once you are doing ACCA, this is your daily bread and butter. Okay, this is daily bread and butter. You are involved in issue of prospectus, you will be part of this activity. You will think about what are the risk factors, everything you will do. Is that they will mention, these are the disclosures they will do. Is that this happens whenever they are going for a public issue. In the annual report also. Is that in the annual report also, we are mentioning the notes to the account. But in the annual also, there will be a management summary. You are disclosing, you are be transparent, you are true, fair, is it right? You are unbiased. These are in the management summary. The management will say what happens. You will give a brief account what happens during the current year and what are the risk factors will be there in future. So what are the risk factors will be there in the future? This is, they are talking about numbers only. They are not talking about anything else. Okay. What is the message we are giving is there should be an adequate disclosure. Review management judgments and decisions of the management in making the estimates. What you are doing, we are reviewing whether these estimates have done reasonable. If there are indicators of possible, if there is any unbiased is there. Is it, if it's justifiable, you have to review. Okay, you have to review and you have to work it out. And last but not the least, obtain written representation from the management. This is the standard statement in substantive procedures. Obtain written representation from the management depending on the situation, okay, depending on inventory, depending on property, plant and equipment, depending on the cash, depending on the receivables, whichever we are talking about. But one thing is, you make sure here you will get automatically, the moment you are mentioning this, appropriate marks you will get. Okay, 1 mark or 2 mark, whatever is there, you will get. Obtain written representation from the management, whether they believe that, here we are talking about the assumption, whether the assumptions are reasonable. Fine. These are the things. Means now you can say that we are now in the subject. Okay, we are not now in the subject. Whatever the theoretical things we are just applying. What they say, describe the audit procedures required in respect of accounting estimates. You have asked, is that one of you have asked me the answers? If it is there, I will definitely next time onwards, I will send you the question paper with suggested answers. Read suggested answers, but when you are typing it or when you are writing on your own, take the idea from that and write in your own words. Okay, I will next time onwards, when I am giving you the questions, I will give you the answers, suggested answers also. Okay, and whatever I have mentioned the previous ones, where if there is answers are there, give me time. Okay, I will just make sure that it will be done. Okay, fine. What are the accounting? See what it says. First, you have to what are the audit procedures. The same thing. What we have done, they have copy pasted it. Okay, they have copy pasted it. Inquire from management how accounting estimates is made and the data and assumptions on which it is based. First, you have to see that this is what is it. Discuss with the management what they have done. If they have done, yes, if you are agreeing it is reasonable, it is justifiable. Again, we should not stop there. Okay, we have to go for some more details. Okay, this is the first thing. Make an assessment whether it has been reasonableness, that their assumptions are reasonable or not, their estimates are reasonable or not. Their estimates are, if assume, take an example, is it that this now ACCA Code of Ethics say that the performance materiality is 1% in terms of what? In terms of sales. We cannot say that our assumption should not be 5%. Okay, our assumption should not be. It should be within this plus or minus 1 only. Is that whatever the framework that has been given, we have to work according to it. Okay, this is the first point. First, we have to inquire. Then the second, we have to assessment of the reason. Third, you have to see. Third, what we have to do, we have to see the draft disclosure. Why we will see the draft disclosure? If there is any changes is there, we can make corrections in that. Is that if there are any changes is there, without anything we can say, to ensure that disclosures relating to our accounting estimates are correct. Little bit you are getting more information. Now you have to be very, you have to break down the things. Okay, you have to break down the things, but question and answers should be, it will take time. Examination also, I am telling you this, examination instantly it will not pop up in our mind. Okay, slowly and steadily it will trigger. Slowly and steadily it will trigger. Yes, these are the things we are happening. I will tell you how we have to proceed in that aspect also. Is that now what we have to do? First, you have to inquire with the management. I am repeating again. First, you have to inquire with the management how they have made the estimates and on what basis. The second, we have to assess that there is a assumptions are made, reasonableness is there in the assumptions, and the accounting estimates. Third, we have to look into the draft disclosure whether it has been mentioned correctly. The fourth, what we have to do, we have to develop an expectations of possible estimates. Is it point of estimates? What are the things? That is the reason. Now you see the thing. If you have what you are doing, we are doing sensitivity analysis. We will do what is the optimistic situation, what is the pessimistic situation. Is it what is the normal situation? Is that we are doing this? We are doing what is the plus and what is the minus in nothing but what is the range. Is that point estimate? We are saying, see, that is the reason. Always make sure that there should be some plus or minus. Okay, plus or minus 1%, plus or minus 0.5%, like that. Develop a range of amounts. Okay, to evaluate that. Okay, between plus or minus 100, plus or minus. There I am giving an example. Something you have to very specifically you have to make an estimate. Fourth one, fifth one. Review the judgments and decisions by the management. See, auditor responsibility, this is what happens with respect to, especially in the final audit. In the final audit, you will review the judgments and decisions by the management. Is that in the making the estimates, whether they have indicators of any management bias. We want to know, show the thing. See, what we are doing in the first instance, we are saying we are inquiring, okay, whether it is on what it has been based. The fifth one, what we are doing, we want to know whether the management has made a unbiased statement, unbiased estimates or not. Is it? Last one, as simple as that. At every case, it will be what they say, that obtain written representation from the management whether it has significant assumption in making the assessments or estimates are reasonable. Even it is correct. Take my word, I am telling you this. Even if you think that everything is fine, even you think that the estimates are perfect, even you think that assumptions are reasonable, estimates are accurate, even in that case, the last thing you have to do is you have to take that in writing. Anything, is it right? Anything we should not ignore. We should not take it as granted. Small thing, if it is material misstatement, especially material misstatement we have to do. Even if it is thing that there is some error is there, You at least you have to discuss. We, as an auditor, will not take any responsibility. The auditor is responsible for true and fairness. That's all. If there is any material misstatements, everything is there, the auditor first will take everything from discuss, inquire from the management. You will see the reasonableness, and in the end, they will take the in writing. Is it right? The question says 5 marks. Okay, the question says 5 marks. When it is 5 marks, it is 5 points. Okay, it is 5 points. Now again, what I want to say is, written representation should be last. How many are there? 6 are there. Okay. See, somewhere it happens. I'm not saying that we are that much perfect. In examination, we'll work on stress. We are not. But don't make sure that you have to write a written representation in the beginning. Okay. First, you have to inquire. Then you have to know the reasonable of assurance. Then only we will review. Is it? Once you are reviewing, we will develop our own. Is it? Then we will see what is the review of the judgments. Is it our review and management review is matching or wrong? If things perfect, then we'll go for written representation. This is the difficult link. I can say this is the difficult thread in the auditing paper. Okay, slowly and steadily. This is where I will counsel you. This is where I will advise you repeatedly, again and again. Don't try to break. Okay, don't try. It happens, and if it happens, don't take that much seriously. In the examination, we should not be worried that okay, after examination we say that I have written this first. Once it's done. It happens. 1 or 2 points you will mix up, plus or minus. But major changes should not be there. You should not write inquire with management in the end and representation in the second point. Are you okay about this?
Yes.
Okay. Now, coming to the next one, the second part. Okay, the second part. What is sampling? It's a very easy. It is a very easy scoring section. Okay, very easy scoring section. They will give. Okay, they will give 2 to 4 marks. 2 to 4 marks. Every mark is important. Understand what? Every other mark is important. Even 1 mark is important. Take my word. Okay. Audit sampling is up. What is the sampling? Sampling. What they are doing? You will have so many transactions. Is there? Is it right? Millions of transactions. You take the bank. How many transactions are there? Million. What will happen? You are talking whether it is an internal auditor or it is an external auditor. External auditor, what will do? They will come for 5 days. They will come for 15 days. Okay. Maximum they will come for 1 month. 1 month they will check all the transactions. Every other thing, no. They will check only a sample. Sample is very important topic in auditing. Understand what? Audit sampling is very important topic. Is it very important? Because in financial statements also we are working on the sample. The auditing is based on sampling. That's all. Make it fully stop there. Is it? Audit sampling is the application of procedures to less than 100% of items within the population of audit relevance. Okay, means we are not doing what we are doing. We'll say that yes, we are doing the sampling for this. We will have, is it right? We will have, make it a point. Okay, we will have 12 months. Okay, we will have 12 months. Every month we will say that every month we will take 10 transactions. I'm just giving an example. Okay, 10 transactions, 100 transactions. Is that likewise you will select that yes, randomly I will take 10 transactions. Okay, you have so many vouchers. If even you are doing based on the IT based audit also, you will make sure that you will take a sample of assets. Yeah, break the sentence. Okay, audit sampling is the application of procedures to less than 100% of items within the population. such as that all sampling units have a chance of selection. What is the second one? This will enable the auditor to obtain and evaluate evidence about some characteristics. Okay, you will focus on amounts. Okay, you will focus on the amounts. You will see the characteristics is amount. You will focus on the dates. You will say that I will do an audit for last 5 days. You will say that I will do audit for more than transactions worth more than 10,000. Is it? Likewise, you will have some characteristics of the items selected in order to provide an auditor a reasonable basis. You have 2 points are there. The first one it is for less than 100%. The second thing is based on some characters, some criteria we will define some criteria. Okay, on which we are going to identify the samples. Okay, I audit the evidence on which that what we are doing. Based on that, we will draw the conclusions. What is the audit sampling? Can use, there are 2 types of things, whether it is a statistical or non-statistical. Just read once till population. Slowly read, understand. Once you are reading, it should be in your mind. Is done. If you are done, say yes. Is it okay?
Yes.
Fine. Now, what is the audit sampling says? Audit sampling talks. See, our job is only this much you have to remember. $530 for what? $540 for what? $520 for what? $570 is for what? $300 is what? That much is our job. Our task is that much only. Okay, this is basic fundamental paper. Okay, this is the paper which talks about fundamentals. Is it? It is not an advanced paper we are talking about. Is it? Fundamental papers rules has to be very, very specific. Why do auditors need to use audit sampling? I will not take that much time because you know this. Imagine you are an auditor responsible for audit work. Is that all the time? Whenever you have these type of things, I will divide this. Okay, you are responsible for audit work or receivables. You are talking about the receivables, substantive procedure receivables. Similar to that, we are working. This balance is the largest balance on the statement of financial position or for your client, and the draft end figure is made up of 355 different amounts. You have you have, see what will happen. You will have the receivables. You will have the receive when we are talking in terms of receivables. Every customer will have an account. Is it like in the bank? Customers have the account. Is it right? Customer balances. Take similarity. If you are finding it new, take the similarity. In the what happens in the bank, you will have customer accounts. Is it right? Some customers accounts are on the higher side. Some customers accounts are less than zero balance accounts. We have to identify. We have to build a criteria for that. Are we going to take higher values, or we are taking the zero values, or this is the percentage of higher values, this is the percentage of lower values. Is it likewise? Is it? They say that they have the receivables. It is the highest balance, and the year-end receivables are how many amounts are there, how many clients are there? 355. What they say, the minimum account is $45 and the maximum amount is 63,000. Now you are showing that you are one person in the total team of 4. Okay, you are one person in the total team of 4. Fine. I have 1 minute. You are one person in the total team of 4. It is just would not be practical in terms of time and cost to audit every single balance make to receivables. After auditing receivables, you have to audit payables, accruals, non-current assets too. That's why auditors will use sampling. Means you are not just working on only one element of accounting, receivables. You are having different things and you have to complete that also. In order to do this, what we will do, we cannot going to go through all the accounts of the 355. We will see what are the sample. This is the reason why they will do the sampling. This is the reason why auditors will do the sampling. When they are doing the sampling, they have some ways of doing the sampling. There are ways of non-sampling methods. When you are saying non-sampling, testing 100% of the population. You are testing everything where it can be possible when you have only few items. You are having few items. Is a less number of. Now few items, maybe 10, maybe 20, maybe 50, maybe 100. We are not talking about the numbers. We are saying that it is manageable. Okay. If few items means these items can be manageable. Testing with certain characteristics. Is it non-sampling with certain characteristics. What you will do? You will say high value or key items. High value items we will take. Though we are testing those, we are going with a predetermined decision. Is that we are doing with a predetermined for decision? Is that yes, we are going? This is a non-sampling. Is that non-sampling? Or we are saying that all items which have been over 100 reals, we will check. But in that case, what will happen? You will not have more number of items. Is that we will have only less items. We will have only 10, 30 transactions. Manageable. Okay. Items to obtain specific information. Is that items to obtain? I will write items to obtain a specific info about the client. Okay, we are going to say that yes, for this client, okay, for this client, I need information. Again, predetermined decision. Is that for this client, for this amount? Is that for this amount I want all the transactions? For this date I want all the transactions. For this product, I want transactions. Is it? How items to obtain specific information and items to test procedures. Is it item to test? What are the different audit procedures we are going to do? We will talk about this. We are only focusing on inventory. Actually, we should not be like that. But non-sampling Non-sampling methods are less reliable. Is that non-sampling methods are less reliable. Take this one, okay? In one of the questions, MCQ, we are going to do this. That is the reason I have written here. Is it right? Right? No. Little bit. I don't know how much of you have done this in quantitative methods, in statistics. I don't know to what extent we have done statistics. See, auditing and accounting for you people. I'm telling you this is that we have to be little bit good in mathematics, little bit we have to do in statistics, and more importantly economics. This is partially, we will say that how you are related this to the auditing and accounting. Is it right? Mathematics is part of, we have to do a lot of logical calculations. Is it right? Statistics, we do analysis. Is that economics? Economics is the life. Is it right? It is the mother of accounting, we call it as. Is it right? All that, the entire thing is, we are talking about demand, price and supply. This is what we have not done. Is that we have not done that much on economics and statistics. These three, but slowly, if you do AFM, is it right? If you do AFM, automatically they will talk about statistics. T-test will be there. All the things how we have to test. Is that deviations will be there. Little bit we have to focus on that. We are not going on the concepts, but we will work on applications only. Sampling and non-sampling risk comes in statistics. Okay, that's arises from the, what is the sampling risk? From the possibility that the auditor's conclusion based on the certain size may be different from the conclusion that would be reached if entire population is subject to same audit. I will tell you this. You have, this is called as a population. All the things, is that all the transactions here, is that for a year, okay, all the transactions for the year is a population. Is that this is the population, all transactions. All transactions is called as the population. Now, why it is needed? The most important. Initially, you will see the environment, you see the entity, and you see the risk. You will make an estimate. Is it right? You make an estimate. In the previous, first you will make an estimate. Then when you are making estimate, yes, it is going to be 2%. Okay. Now, when you do the things, estimate 2%, you start doing auditing. Then you will say that I will take a sample of 10%. Okay, I will take a sample of 10% of transactions. If you take the sample of 10% of transactions, you are estimating 2% of error, but the estimation goes to 5%. Actually, it will be how much? It will be 5% error. You are not coming to a conclusion based on this. Then you will say that no, if this is the case, I will extend my sample. Okay, I will extend my sample. I will extend the sample for another 10%. If you read this statement and you read this figure, you will understand. You can simply synchronize what I am talking about. 10%. Now, when you increase the sample size of 10%, definitely the error will not be 5%. Assume the error has been decreased to 3%. Fine. That is our limit. That is the limit of the auditor. Now, if you want to do all the transactions, complete transactions, which is impossible, is that, which is impossible. But if you have that, the option I'm talking about, what will happen? Definitely there is a possibility that the error will be only 1%. There is a possibility, is that this is what the sampling risk. Sampling risk is nothing but, listen carefully, understand, possibly that the auditor conclusion based on the sample of the certain size, 10%, 5%, 15%, 20%, may be different. If you are increasing the sample size, the conclusion will be different. That would be reached if your entire population is subject to the same audit procedures. If you are increasing the size of the sample, the conclusion will be different. Yeah, the conclusion will be different. That is what do increase sampling risk is. If you are taking less sample, okay, if you are taking less sample, the risk is high, very high. If you are taking reasonable sample, okay, if we are taking a reasonable sample, we are not saying risk will be less, but risk will be moderate, risk will be within the estimates. Okay, risk will be within the estimates, risk will be less. This is the simple understanding about the sampling risk. Okay, how you have to take. Now it's up to you. The judgment is yours. The judgment is the auditor judgment, that whether how much sample you are taking. Is it? This is the first one. Non-sampling risk arise from factors that the auditors reach an erroneous conclusions for any reason not related to the size of the sample. Non-sampling, we have, see, your judgment, is it right? Judgment. It is here what happens, sampling risk, I'm talking about sampling, here the risk is less. Non-sampling risk is more. What you are doing, what we have said that we will take only amount, range. We are taking only a specific client. We are talking about a specific date. We'll take that, we'll say that it is going to be dates of first 5 days only. It is not a sampling, is it right? It is not the risk is very, very high. For example, we are not using the right procedures. We are in misinterpretation of the evidence, and fairly we are not recognizing the misstatements of deviations. Is that we are not using inappropriate audit procedure. This is not the right type of procedure. We are going to say that we will focus on only the amounts. Is that only the high value amount? It's not a procedure that we are focusing only on the date. There should be, as a matter of fact, there should be a good spread. Is that good spread of transactions? Is that you should cover maximum without any bias. Is that if you are talking with bias, it is a non-sampling. If unbiased is a sampling. With biased is a non-sampling. What happens, remember, when you are talking about the things, the detection risk is what will happen. The detection risk will increase if the sample size is less. Is it? If the sample size is less, what will happen? Detection risk will be less. Okay. If the non-sampling risk, automatically what will happen? The detection risk will be high. We cannot detect. Is it right? We cannot. If we are focusing only on the client, only on the date, and only on the amount, definitely we are not focusing on from a technical aspects. Is it clear about this? Sampling risk and non-sampling risk. I have taken a little bit more time here. Okay, I have taken a little bit more time here. Okay. Can I stop here or should continue next class? Where are you people?
It's okay for me.
Can I continue?
For me, it's okay.
Okay, fine. I'll take 2 slides maximum. Okay, I will take these 2 slides. Once we have done this, with this will stop. Okay. Now, what are the types of samples? Statistical samples use mathematical number tables. Choose sample free. Is there statistical samples? To choose a sample, there should not be any bias. Okay, there should mathematical number. Statistical means we'll say 10%, 20%, very specific. Is that there is a probability? Is that probability theory will be there? Chance of occurrence. Okay, probability theory will be there. We'll say that 0.2. 20% we will take. Okay, 20% probability theory to evaluate the results. Statistical samples more technical. Okay, more technical, more it is more unbiased. This is what we have to understand. Okay, this is what it's more technical, it is unbiased. Here also what will happen, the risk will be less. Non-statistical, no mathematical bias for selection. Is that it is only what they will say, it is only our wish and will. Okay, wish and will. Okay, what convenience. Okay, it is about convenience. What we think we do. Is that what we think we do? Definitely it doesn't make any sense. So if each item of the population does not have a equal chance of selected, that sampling text is called as a non-statistical. Section A in concepts, be very clear about this. Section A, multiple choice. Okay, anywhere they will focus here. Section A, rules has to be, concepts has to be very clear. If there is no chance, if there is no possibility that everything, see what happens, see the thing. If you want to select 10, is it right? You have to select 10. You are selecting any 10 transactions, okay? Then it is called any 10 random selection. We'll do in the next slide, okay? We do that. It is a random selection. But if you are saying that 10, I will choose 10, then I will see which are good, is that which are good, which are not good. Then I will go with some predetermined mind. It is called a non-statistical. That sampling technique is called as non-statistical. Is that what are the things? Audit sampling. See, here they have mentioned very clearly. Okay, here they have mentioned very clear what are statistical sampling and what are non-statistical. I will not go that much detail in that because it is not that much important. I am telling you this. Is it very? It is important. I will tell. We want to know what is the random, what is systematic. That's all. We are not talking about the random. Is there is a equal chance of selection. Is that random sampling is there is a equal chance. What is a systematic chance? Systematic sampling, there is a constant interval between selections. When we say constant interval between selections, you have, see, from the audit point of view, you take the dates, okay? You have 1 to 5. You will take from 1 to 5. Again, you will say that from 10 to 15 I will take. Is that selective? Is that systematic? Then you will say that I am taking from 25 to 30th. Is that here you are taking 10 transactions? Is that here you are taking 10 transactions? Here you are taking 10 transactions. Apply this in auditing, then only it will make sense. Okay, systematic involves selecting using constant intervals between selection. The first interval should be a random start. Is that you are going to say that yes sir? Now you will say that no, I will start with 3. But when you are starting with 3, you have to 3 to 8. Is that we are starting with 13, 13 to 18. We are starting with 23, 23 to 28. 5 gap. Is that is a systematic sampling. Is that next haphazard sampling, alternative to random sampling. Auditors are satisfied that the sampling is representative of the entire population. This is an alternative, isn't it? This is the other option for the random sampling. The auditors will have that anywhere they will pick up. Okay, you have sometimes you will have assume you have different locations, location 1, location 2, location 3, location 4. Have that they will go for location 4 and they will do systematic sampling. Is it? They will do they will select that I will do the audit for this location based on the conclusion of this location. They will give a overall opinion. Is it justifiable? No. Is it? But see, you have 4 locations. You have to do all 4 locations. But what you will do? The auditor will say that no, I will do only for 1 location. Okay, I will do only on one location. But I will do systematic sample. Everything will be systematic. Okay, everything will be statistical method. Is it? No. But based on 1 location, I will give an overall opinion. Again, there is a big question mark, isn't it? It's a block sample, isn't it? Now, this method requires to guard against selection which is biased. Okay, it is a bias, it's not a right process which you have to select. Next one, block sample may be used to check whether certain items are particular characteristic. What they gave the example, they said that auditor may use a sample of 50 consecutive checks to test. 50 next second block that you are checking the checks with this series. That is the block sampling. Okay, you are verifying the checks with the specific series. It is a block sample. Whether checks are signed by authorized signatories rather than picking the single checks. You will see that from 1 to 20 that all the checks has been signed by authorized signatory or not. That is a block sample. And last one, it is a statistical monetary unit sampling, which we are going to use in receivables, especially in receivables or in payables. This is the type of weighted sample size. Selection and evaluation results is based on what? Monetary items. Aged receivables. Is that we are talking about aged receivables. We will work on aged receivables. It's a monetary. Is it right? Absolute inventory. Is that absolute inventory? It is a monetary. Is it right? We are focusing on that area specifically. If it is based on the amounts, okay? Monetary unit sampling. What are the things? Random sampling, systematic sampling, haphazard sampling, block sampling. Only thing what we have to be very clear is which sampling methods are used in which areas. In some cases, they gave examples, okay? In some very specific cases, they gave examples. In other cases, they have not given any example. We will cover this, okay? We will cover this whenever it is required. Just read this one. We are talking about systematic sampling. Which of the following sample methods correctly describe systematic sampling? They have given the answer, okay? Fine, that's not we are talking about. See this one. This is important. Choice A refers to what? Choice A talks about, this is the monetary sampling. Always, choice 3 refers about the block sampling. Wherever in the questions they gave you the explanations, question bank, when you are revising the question bank, make sure that don't focus on the correct answer. I will suggest, this is the technique I will say, have a closer view about the explanation also. Okay, the explanation gives you more understanding. Means we are not focusing only on 1.2 marks. We are focusing on 6 marks. Get my point? We are focusing on 6 marks. Each point we will have a complete understanding. Is it clear?
Yes.
Can I stop here?